The market has changed a lot, right? How we do things, compliance always obviously is a big issue. I think, and I've been talking to a lot of my guys about it, I think that we've got a couple of different lanes you got to pick to work in. You know, you said that you and Danielle a couple of years ago said we're going to specialize in a couple of things out there, right? And I see a lot of discount brokers coming online. You know, one of them be like Rocket Mortgage, right? And I was talking to the Rocket Mortgage guys at a technology forum for mortgages about 6 months ago. And they told me only about 12% of the mortgages, the people that go into Quicken to do Rocket Mortgage actually get to go Rocket Mortgage because they have salary, good credit scores, money in the bank, blah, 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 right? The others have to have a loan officer. So the reason a lot of those people have such cheaper rates, they don't even need a loan officer. They just go straight to a processor and it goes that way. So I think a lot of times as loan officers, we almost have to pick which lane we want to be in moving forward in our careers. So with that kind of an overall theme, what do you think as a lender, what do you do to compete with some of these discount lenders that are out there, especially the ones out of town or the big ones?
Sure. It's, I mean, I've got a lot of clients that have gone to those guys first, and they've come back to me because they can't get a hold of them on the weekend or after hours, or if they've got a question about something the processor's asking for, they don't get it answered in a timely manner. They get confused, and a lot of times those online banks, they just can't do anything. If it has any hair on it, they can't touch the file. You know, if the debt ratio goes over, say your 43% debt ratio max limit, they just turn them down, and
without trying to fix it.
Without
right?
trying to fix it, yeah. And that's what we do here. Is, I mean, if we run into any issues, we have to, as lenders, we have to know which programs to look at. If there's an issue with the debt ratio, we know that we need to change it to FHA or add MCC to it, or, you know, instead of putting so much money down, put it towards the a debt to pay off. That's the kind of stuff that you're not going to get with your online lenders.
And to be honest with you, I like your 85-15 rule because I think that only about 10 or 15% of those people go that super slick way. The other ones, everybody's a little bit different. Everybody's either self-employed or they have a new job or they lost their job or whatever it may be, right?
And they can't close.
And they can't close.
Yeah, they'll ask for the same docs over again. They'll make up some condition. Their DTI is often, you bring them back to Supreme Lending. You and I have had a couple of deals that way. And DTI was never an issue. Well, where did that come from? So a lot of these lenders come out of nowhere.
Well, they're not really lenders, right? They're just,
Well, I
they're
don't know
people
what they
that,
are.
they throw up their butts in seats to somewhere and say, read off this guideline here, right?
Yeah, and they can't close anyway.
Yeah.